Good evening, everybody. Sorry for the delay, but tonight we have the great pleasure of having Vince Vora with us. He is somebody you really want to take a look at his techniques. He's been trading for decades. He's got some very interesting trading techniques, so I'm not going to use any more. Vince, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thank you so much, Steve. I'm glad to be here with you. Thanks for being here, everyone. And I'd like to speak to you tonight about a system that I've been working on for many, many, many years. This is what I call my baby. It's called Veracity, and it's based solely on technical analysis, as all my systems are. But it's one that I have tested and tweaked through many different types of markets, and it has been extremely consistent for me. And so I'm very, very happy to share it with you tonight. Again, thanks for being with us. Before we get started, please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable with the system that you are using. As Steve said, I am Vince Vora. I'm the head trader here at Trading Wins, and I am the developer of the Veracity system. Over the years, we've developed several systems, but this is the one that I am most proud of, and I'll explain why as we go through the presentation. Now, in tonight's presentation, what I'd like to do, first of all, is start with our money management rules. It's just 5 quick rules that we go by. That's there for me to show you a strategy or talk about a strategy without the money management rules. This is a key portion of the overall trading plan. Without it, and no matter how strong the system is, you're going to have difficulty making money with it. So these are absolutely important. I'll give you them one by one as we go through this. Then we'll talk about the components that make up the Veracity strategy. This was my search for the Holy Grail, and it's at the point now where it really can't get much better than this, I don't think, and that's why I'm happy to share it with you. As we go through it, I'm going to explain how it works and why it works, but more importantly, how this can work for you as well. Along the way, if you have questions, by all means, please type them into your chat, and I'll do my best to get those to you or answer those for you as we go through this presentation. So let's get started with the money management rules. As I said, there's 5 simple rules. Now, the first one may seem a little silly at first glance, to trade with a positive mindset, but this is more important than you might think. Over the years, I've coached hundreds, if not thousands of people, and the one thing I have noticed is that mistakes tend to happen most when someone isn't quite feeling well or just isn't. If you're a little distracted, maybe a little under the weather, you never want to sit down to trade. Now, I do see some comments that the screen is looking a little too big. Is that the case for everyone? Let's just see.
Vince, that's not you. Everybody, if your screen is too big, up on the top row, there's a little icon that shows all the arrows pointing inward. Click on that, and that will reduce the screen.
Okay, thank you, Steve. Excellent. Okay, so as I was saying, you really do want to focus when you're trading. So turn off all other distractions. Make sure you're feeling well and you're in the right mindset when you are going to trade, because in this business, if you make a mistake, it actually costs you money, and that's the last thing you want to do is lose money. The other thing is that when it comes to trading, there are many ways to find an entry and an exit, and the Veracity system will pinpoint those for you. Manage your trade once you're in it, then it is identifying the entry and the exits. So the only way you will be able to manage a trade appropriately and not get scared out of it early or make some other kind of mistake is to trade with an amount that feels completely insignificant to you. If you go in with too big of size, too much money, and when you're in that position, your emotions come into play, and you simply will not be able to manage that trade the way you should. So whether it's a couple $100 for you or several $1,000, the amount doesn't matter. Just make sure it's an amount that feels completely insignificant to you. When you do that and you use a system like Veracity that's consistent, it does a couple things for you. Not only will it allow you to build your account slowly and gain confidence in the system itself, but also in yourself as a trader, and that will pay off big time later on. Okay? Now, if any before or followed me for any period of time, you'll know that I am completely risk averse. I absolutely hate risk, and I will do absolutely anything to avoid it. So one of the other rules we wrap around this plan is to never put any more than 5% of your account balance in any one trade. And the goal here is to start with 5%, but certainly not end with 5%. We want to work our way towards 1%. Is, again, going back to rule number 2. First of all, no matter what happens with that trade, if it completely blows up on us, we won't take a big loss, and that's very important. But as you grow your account, even when you're reducing the percentage you put in each trade, as you grow your account, the dollar figure will still continue to go higher. So when you can get to the point where you're only putting 1% of your account in a trade, and yet it's still a sizable trade, you can be very relaxed, but you're going to be in the position to make a very sizable return at the same time. So that's what we want to do. Now, we always here at Trading Winds like to keep half of our account in cash or in reserve, and that may sound crazy when you first think of it, but there's a reason for it. There are many things when it comes to the markets that we cannot control. To bring it up, but the best example I can give you is a 9/11. Right? None of us knew or could have anticipated that such an event would have happened, and there's nothing we could have done to plan for it if we didn't know what was happening. So, just in case something like that were to happen again, if you were to have 50% of your account in cash and something like that happening, and not only would the loss that you take from an event like that be a lot smaller, but you will be left with money that you can put back into the market and make back those losses. Now, I will tell you ahead of time, Veracity takes a very, very small amount of risk. As I go through the examples today, don't go right for you. It gets you out very, very quickly. But when things do go well for you, it tends to keep you in the trade for the bulk of that order. And so trading with only half the account, it still leaves you plenty of money to trade with, even if you're starting off with a small account. Now, last but certainly not least, what you want to do is spread your trades out. How many times have we seen a market where you get a strong day? Say the Dow's up 300 points or the S&P's up 25. On that day, you'll get a number of trades setting up to the long side, right? If you were to jump in and open 6, 7, 8, 9 trades in the one direction, and the very next day the market retraces, which we've seen happen many, many times, then you'd find yourself in a huge hole right off the start. So that's what you want to avoid here. So what you want to do, regardless of which time frame you're trading, is to always select one or two of the highest probability trade setups. And as we go through this, I'm going to show you how to select those high probability trades using Veracity. Okay? A couple of other rules or sayings that we like to use around here is, number one, you will never go broke taking profits. And this is meant for those of you who are just starting out. Okay? And the reason why is, again, when you're starting out, you're generally starting with a smaller account. Okay? So when you have profits, get used to banking them right off the start. First of all, again, you don't need a lot of money to trade Veracity with, and the risk we take is very small. But as you grow your account, you will learn how to remain in a trade for the life of that order. At the beginning, one of your biggest challenges as a new trader is going to be staying with that trade when it's going well. Okay? I've seen it over and over again. Many traders, they get into a trade, and then, that first little red bar against you, you start to panic. It's, am I going to give up my profit through that thought process? Well, if you're banking profits quickly at the beginning, you're growing your account, you're gaining confidence, and over time, you'll learn how to remain in that trade a little longer. Now, lastly, here, and if there's one thing you walk away with from this, I want it to be this point here. Trading is never, ever about you yourself and whether you're right or wrong. Okay, if you're in this to be the world's greatest stock picker, you're in it for the wrong reasons, and you almost certainly lose money at this. Okay, what you want to focus on is execution. Okay? In other words, what this is about is how much money you make when you're right. What I mean by that is you want to control your downside. Okay, and if you just focus on execution, following the right steps, building the right habits, having that checklist of criteria before you enter a trade, and a checklist of criteria for exiting a trade, and you make sure that every box is ticked off before you go in that trade, even if it goes against you, okay? It's not your fault. Losses in this business are a cost of doing business. They are a part of this business. It's not that you did anything wrong, okay? You will take losses even when you follow the rules to a T, all right? But the point is not to kick yourself over it. Just make sure you didn't slip up somewhere. Go back, check your list, and as long as you're doing everything right, then keep moving forward. Now, when it comes to Veracity, Veracity has anchors and oscillators behind it, okay? That I have back tested and forward tested, meaning traded it with real money for many, many years. This system came together very quickly, almost 20 years ago. It took me about 2-3 weeks to put the core of it together. But what took many, many years is to try to get it to the point where the downside would be capped, but the upside would remain unlimited. That was the challenge. So what will it do for you? Well, unlike the other systems we have, this one is designed to catch the bigger moves. And you're going to see that as I bring up the charts in the next couple of minutes here. But at the same time, it still keeps losses small, but gains unlimited. So it maximizes that safety component in each trade. And that's really what it's meant for. Now, what it will do for you is help you identify not just short-term, but swing trading opportunities and longer-term trading opportunities. If any of you trade a retirement account, for example, you're really going to love this. But even whether you're a 1-minute trader, 5-minute trader, daily, it really doesn't matter. We'll go through many different time frames. But those bigger long-term trades are huge, and I'll show you an easy way to put those on even if you're a day trader, for example. Okay. The other thing it can do for you is help you predict the major market moves. So when are we ending a bull market? When are we starting a new bull market or a bear market, etc.? Let me bring up my charts here and walk you through this, okay? Now, this is my Metastock platform, and this is a chart of ABMD. The reason why I put this on here, I don't have the indicator, the Veracity indicator on yet, but I want to just say that one of the best things you can do for yourself as a trader is to always focus on charts clean and orderly and are trending strongly in one direction or another. So with a chart like this on ABMD, whether you're trading Veracity or any other strategy, it's very predictable, right? You look at the candles and they're very similar in size. It's very clear the direction they're moving in. And it's also easy to spot changes in direction. Like now we are putting in lower highs and lower lows, and it's very easy to spot when the chart is orderly. If we were to trade, say, a chart like Tesla, for example, which is a very popular stock, and a lot of people like to trade, but have a look at it now, here. And now this has the indicator on it. Ignore that for a second. I'll go back to that. But, actually, let me take this off just so You can see it and compare it to ABMD. Have a look at that. Can you really tell what the next direction of this stock is? The problem here is that no matter where you're going to get in, your out is extremely high. So do yourself a favor and stick to stocks that are trending strongly in one direction or another. Now let's have a look and start with a chart of the Qs here. Okay? Let's have a look at the Qs and let's put on the veracity indicator here. Now let's start with a monthly time frame. And here, what you want to look for are major turning points, okay? And let's have a look at the S&P as well. Here, what's happening? Let me write that incorrectly. My apologies. XPY, let's do SPY. Here, and let's go to the monthly. There we go. So this is the chart I wanted to share with you. So from a longer term perspective, when you're looking at the overall markets, right, veracity will pinpoint the bigger moves, as you can see. So back here in 2012, all right, mid-2012, was basically that the real thrust of that of the bull market. Then we kind of went flat for a little while here, up until the beginning or late or middle of 2016, and that's when we started the next run. Now here, it doesn't mean you have to trade on the monthly time frame, but when you see something like this, whether it's an index or it's an individual stock, you can, once it pinpoints that the bull market is starting, you can lower your time frame and start looking for trades in that direction. Now, for veracity here on Metastock, what you're going to see is these little diamonds, either red or green. Those are to signify the setup candles, and the arrows are actually telling you when to get in the trade. So if you were to see a green little diamond here, it's sort of giving you a heads up. It's telling you to get ready. It's not ready to be for a trade just yet, but it's giving you a heads up. And it doesn't always trigger, just like here. There was something missing, one component that didn't, one indicator that didn't line up with the rest, and it never did trigger. Then it set up again here, and the following month, it triggered, okay? And then for the life of that order, it's going to paint all the candles the same color. It's going to keep them green. And that we did that specifically to help you remain disciplined and not get scared out of an order, okay? That way, if you start seeing red candles against you, you might question it, etc. And this way, they're all going to be painted green until we get this little exit flag. Okay. Now, when we can look at any stock, and by all means, type in a symbol if you want to see a stock. Okay. I'll just go through it random, some Dow components, some Forex pairs, some commodities, that sort of thing. Here's a chart of Nike. Now, at first glance, you're going to see numerous little setups here. The whole point is not to take every trade, okay? At the end of this, I'm going to talk to you about a recording that we put together for you that will tell you exactly which trades to take and which ones to avoid. But basically, one easy thing you can do is focus on the ones that happen when the sloping moving average here. Here we have the 20-period simple moving average. I like to use the 20-period simple moving average for momentum. Okay, it does a good job of drawing in the same sort of angle as the price bars. Okay, but it gives us a real good indication of the type of momentum behind that move. And if you just look, as I run through the examples tonight, if you just look at the ones that triggered during an upsloping 20, you're going to see that the vast majority of them are bigger winners, and in most cases, big winners. Okay. Again, whether you're looking at the daily time frame, the weekly time frame, or the monthly time frame, doesn't matter. We could be looking at a 1-minute chart, a 15-minute chart. Here's Nike on a monthly, and you can see the bigger moves. It does a real good job of catching those moves. Or a longer-term trader, and you're managing, say, a retirement account, you'll love this not only because it keeps you in for the life of that order, but throughout this time you could be collecting dividends, you could be selling calls against this for extra premium. There are a number of things you can do. But basically, when that moving average is flat, that means you have no momentum. So in most cases, we want to avoid these trades, okay? One situation where we want to take a trade, okay? Like in this area here, if I zoom in a little and center it for you, there we go. Notice how in here, it was a little consolidation period, right? And throughout that consolidation period, we did have some trade setups, but you can see they really went nowhere. We do not want to take these. The reason why we wanted to take this one here is because when it did trigger, it moved above the highs of this range. In other words, it was a breakout. Okay? It was a breakout. Vicky's asking what's better, the 50-period moving average or the 20? I prefer the 20. There's absolutely nothing wrong with the 50, and you can keep both on your chart if you like. For me, the 20 is a shorter term and gives you a better indication of the current momentum behind that move. It's also the most widely used moving average out there by both retail traders as well as professionals. So I prefer that. But if you stick to the ones that happen when there's slope in your favor, you can't go wrong. But during that class, we're going to show you how to find these setups here. This is a simple one. Here's the high of that range, and off it goes. Okay. But whether you're trading Nike, whether you're trading, it could be anything. Amazon, Apple, could be a forex pair. How many of you trade forex? Let's look at the Japanese yen, US dollar pair here. So let's zoom out for a second here. And what you'll notice is that it keeps you in for the bulk of that move. Okay? In here. Nice strong slope in the direction of the trade on that 20-period moving average. And there's nice solid follow through. Okay? And we can go back. Does a real good job. And there are a lot of trades, again, that you see here that we will not take. We will not bother with these trades. Let's look at the euro for a second. Let's look at the euro. Okay. Here's the euro more recently. Real nice strong move. Again, why this one? Well, it was a breakout from this channel, which worked out beautifully. And you can see that it gets you in near the early stage of that breakout and gets you out almost at the bottom of that move. There's a bit of a retracement before getting us out, but you can see it keeps you in for the bulk of that order. Just like over here. Same type of thing, just like back in here. Right? It catches the bigger moves. And in that pro class, that recording I'm going to share with you, we show you how to stay away from these types of trades but the whole point is you don't want to put in on 50, 60 trades a day. You only want to select one or two of the highest probability, depending on your time frame, and we'll show you exactly how to do that. Let's have a look at NVIDIA. How many of you trade NVIDIA? That's been a very popular stock over the last few years. Have a look at NVIDIA. Again, it catches the major moves. Now, this is the daily, right? How about we go shorter term? Here, let's have a look at something like a 5-minute. How many of you are day traders here? Right? Let's have a look. So, again, it'll catch some pretty sizable moves throughout. And if you stick to the ones with slope, have a look at the slope here on the 20, have a look at the slope here on the 20 here, right? You can just simply avoid the ones with a flat moving average. It'll get rid of most of the chop that you do not want to trade, and you just focus on the ones with slope in your direction. Even going back, slope, you want to take the slope. The flat ones you do not, right? Plain and simple. So sometimes you might be sitting through parts of the day. This is obviously a very quiet day, not a whole lot going on. on the 5-minute chart. Let's see what it looks like on the 1 minute. Let's widen out here. And again, the ones with slope right in here, these are the no-brainers, like in here. Okay? Slope up, slope down. These are the ones you want to focus on. Look at recently. These moves here. That's what you want. And I will tell you that one time frame I really love is the hourly time frame, using stocks over $100. And the reason for that is I prefer to trade options. And that way you can play, the Amazons, the Nvidias of the world, the Teslas of the world, where normally the options would be very expensive. You can use weekly options that are a lot less expensive, but yet you can capture 10, 20, 30-point moves in like a day and a half, 2 days on those hourly charts. They are fantastic. So have a look at that. Now, let's have a look at some of the futures contracts, right? Commodities. So if we look at crude oil here, let's bring in some data here on the daily here. You can see that it catches some real nice moves, right? But you remember when crude was over $100 and then collapsed? Well, there you go. Caught that move when that initial drop happened. There it is. And again, the thing that took so long to figure out for me here was how to keep you in that order throughout there. Okay, bulk of the profits, almost at the very bottom of that. And then it gets us back in here, but we would not have taken this trade. I can tell you right now, we would not have taken this trade. It's when you can take, since we broke the low of this little mini consolidation, but you can see the moving average was actually sloping against us, so I would not have suggested that. This one here, I would have. Okay. And now, oil recently had started. We got out of this trade recently, and now we're just waiting for that next trigger back in. Okay. So again, any time frame, any market, it really doesn't matter. We will pinpoint and find those bigger winners. Avoid the ones with a flat moving average. Follow the ones with a sloping moving average. Let's have a look at a few other stocks here. Oh, let's try that symbol again. This is Marriott. Been trading Marriott for a long time. Love it. And I mean, there it is. During the strongest trends, it does an exceptional job of catching the bulk of it. If you look at here, I mean, yes, it got us out a few times. The reason for it, getting you out and back in, is again, I hate risk. I absolutely hate risk. And so I'll do anything to preserve the profit and avoid taking additional risk. Now, with commissions being as inexpensive as they are these days, this little in and out doesn't matter. It's completely insignificant. But if you look at this run from when it started to when it ended here, aside from a few little bars here that it kept us out of, we were in for the bulk of that move. And that's exactly what you want to see. And right now, you can see on Mary's setup bar. So tomorrow, it is likely that if it starts to follow through here and trade below today's low, then we'll get a trigger in and we'll be off and running. And you can look at the slope on that as well. It's there. Now, you can obviously be a little safer by using multiple time frames. In other words, if say Marriott is position here, and you're on the daily, you can go to the weekly and the monthly and confirm that we're in an uptrend there, or we're already in a long trade on those time frames. That's just adding another layer. Okay. So Lewis saying, how do you determine which way the slope is going? Hindsight is always better than foresight. No, it's not a matter of hindsight. The slope, this is a 20-period moving average. So all this is doing is counting back 20 bars and averaging the highs and lows and plotting that line. So this is just a simple moving average. That's all. So when this appears, just like here, this is not hindsight. This is happening right now. There is a setup right here. And tomorrow, if it trades below today's low, it'll show you a red arrow. Okay? And at that time, we see that there is a downslope on that moving average, right? In the direction of the trade, which in this case would be short. So it's not about looking back. It's a matter of following the moving average along with the little diamonds and arrows here. Okay? I know how well this works because I've used it and I created it, obviously, and I've been trading with it for so many years. If you're going to try this out, what I'd like you to do is just flip through as many charts as you can with it, okay? After watching that pro class that comes with it. And don't put real money in it just yet. Play with it, have a look at it, gain some confidence in it. You'll see just how consistent it is, okay? I can't expect you just from a few examples like this to put your faith fully in it. But you'll see very quickly just how well this works. Let me show you gold here, if any of you trade futures on gold. Have a look at this on the daily recently. We've had a nice strong trend lower. And again, if you get that setup and that trigger right along that downsloping 20, and it doesn't matter whether the trigger happens in front of the moving average, whether it happens behind, or whether it overlaps the moving average. That doesn't matter. What matters is the slope of the moving average. So the more dramatic or significant that slope, the more momentum there is in that direction, and the more likely that the trade will work out in your favor. Okay? So I always suggest you look for a slope, at least 45-degree angle, more or less. Just eyeball it. Because as you can see, there are plenty of setups. You're never going to run out of setups. But you want to focus on the ones with slope. Now, Vicky, or no, it was Joe. Joe's asking for Baba. Let's have a look at Alibaba. They came out with earnings. It goes, is it .k? I believe it is here. Let's have a look. Now, the other thing I want you to do when you first bring a stock up like this is put in a decent amount of data. So if you can see here, when you bring up more data, you can tell that before we had a nice trend in place here, right? And then we kind of went sideways. Now, we could be starting a new trend. Use the basics of technical analysis, right? And we cover a lot of these in that pro class. But for example, if you look at the low of this range, right? We're talking more or less around here, right? So here's a setup now, right? Again, if we get a trade below today's low, it'll probably trigger. Now, this all depends on how aggressive or how conservative you want to be, right? So if you want to take a shot at this before it clears this significant level of support, because look how many times it's tested this level and bounced off it, right? That's a significant area of support. Get in the trade and it bounces right off and it goes higher again, right? In other words, it holds support. Or it could be that we break through. The way I would treat this is I would personally wait for it to break through. And the reason being is, first of all, if it does break through, there's a lot of room for this to run, okay? Because there isn't a whole lot of support here holding this up along the way, okay? So I may miss the first piece of it, but on that very next pullback, I'll catch the remainder of that move. And secondly, if it breaks below this significant area of support, the chances of it getting back above are slim to none, at least in the near term, right? Because now that significant support area becomes overhead resistance, okay? So it's just a matter of time before you get some really nice short plays on this going forward. Again, this is going to be a key test for Baba. But the other thing I was going to say was, before you take any trade, or when you're looking at this, say you're considering this and you look back, what do you notice here? What was that first thing I mentioned to you when we compared Tesla to ABMD, right? This has been a very choppy chart. So your odds of success on a choppy chart like this are not high, right? So you don't want to trade within this range, and you have room for the stock to run. Okay, we go through all of this stuff in that pro class. But as always, even within here, if you're going to take a trade, make sure it's with slope in your favor. And the other thing is, if you look back and you say, well, this is messy, these trades are get this in, get this out quickly, I don't like this, then don't trade the chart. Move on. Find one that traditionally has done very well with this. Okay? Let's look at another one, ODFL. Back in here, okay? Strong trend, nice, easy trades. Nice, easy setups. With slope, you see the arrow with slope. Doesn't matter which direction, just make sure you have the moving average moving in the direction of the trade. Jimmy's asking about the 10-minute charts. Jimmy, I don't trade 10-minute charts, but we can. Is there a particular stock you want to look at? If you give me a symbol, I'm happy to pull up a 10-minute chart. We can. This, as I said, is based strictly on technical analysis. So anything you can chart, you can use it on. Stock, options, futures, forex, 1 minute, 5 minute, 10 minute, a month, whatever. Okay. Jeff is asking for CL. Is that crude oil you're talking about, the futures, or let me just pull up just in case if it's something else. Yeah, oil. He's saying. Okay. So let's bring this in here. Let's switch this to 10 minute, and let's see what it looks like on the 10 minute here. Let's bring in some data. There we go. There's the recent. As much data as I can bring you on the. Many of these we would not take, right? A, we don't have slope in our favor. It's in an area of consolidation. You don't want to touch it, okay? When you have slope, you want to touch it, or you're clearing highs, right? Think of it this way. You know, stocks move in a sort of a zigzag fortune, or not just stocks, any instruments, right? They don't go straight forward. Now, they're not always this clean as I'm drawing it, but you know what I mean. So whenever you break a high, and especially if it's an all-time high, okay? If you break a high, and this is territory that the underlying has never been in before, it has a clear path higher, okay? So then it makes another high pivot, it pulls back. Once it breaks that high pivot again, it's in open territory, right? I love trading above all-time highs, okay? So Jay is saying, if trading $100 stocks on hourly, do you take trades in direction of daily trend? Absolutely. What I would do is look at the daily chart, the 4-hour and the daily for that particular underline, and trade in that same direction, okay? Again, these little diamonds here that we call diamonds, the green ones are signaling a setup to the long side. Not that it's ready yet, but it's telling you to get ready. If the green arrow shows up, that's when you want to go long, and you want to stay long until you get the little exit strategy, exit flag. Now, doesn't mean you can't scale out along the way, right? You can scale out along the way. Here, take a 30-year position off at a certain point, another 30. So you can use your fibs to set targets. You can use previous highs as targets. There are many ways to do it. We go through all this in our pro trading class, okay? Now, the other thing is, I know we got started late, and I'm happy to stay a little later, but there are other parts of this that I do want to share with you. Let's bring up another stock. Let's look at MU maybe. MU.O. Let's bring in some data. You can do this on anything, really. Okay? But for example, we have what we call an expert commentary, right? Here. And I'm sure many of you use Metastock with Steve's indicators, etc., and are familiar with this. But this is something that I worked on with Jeff Gibby from Metastock, who helped me design this. And what we did was, see this little triangle here at the very far right. It always defaults to the most recent candle. Now, based on that candle, it'll give you an explanation here in this box. And you can move that little triangle around either by clicking above a different candle or by using the arrows up here in the commentary window. Okay? But if it's on a candle that is not currently in a trade, what it's going to do is it'll tell you a bit about myself and trading wins and the indicator itself. But you'll notice that in between paragraphs here, there's a blank space. That's because there's nothing to report on. There is no trade. Now, if we move forward and we get to the point where we're over the candle that has a little diamond, it'll tell us. And you'll notice that the font is in red because it's a red diamond. Okay, this is warning us for a potential short trade. That's why it highlights it in red. And it'll tell us that there is currently a short trade setup. Now, it tells you exactly what to do, what to look for. To confirm this is a valid shorting opportunity, you must wait for a trade below the setup bar's low to confirm a short signal. Now, if that condition were to be met, then the red arrow would show up at the same time. Okay? And this doesn't repaint. If it plots a red arrow because it triggers, that arrow it will stay on there for the life of that chart. Okay? Whether it's a good trade or bad trade, doesn't matter. It's going to stay on there. Okay? Now, as we move forward, and it gives us see in this case it didn't trigger, right? But when we were here, and then the next day it triggered, it says now the veracity indicator is currently signaling a short sell opportunity. And then it goes on to explain what type of option position you might want to take if you do trade options. And I would highly encourage you to learn about options if you don't already trade with them, because not only can you trade veracity in an even safer way and take even less risk with options, but you can actually really leverage veracity with options, okay? Again, with taking a small amount of risk. So the whole reason for this is to kind of hold your hand through the life of the order. So as we progress through the order and we move on, not only does it remain in red here and tell you exactly what's going on, but it's also giving you suggestions on when to scale out of a trade or when to exit a trade, what to look for an exit criteria. It gives you a price level that you can set your stop at, okay? And it's giving you a suggestion of what you might want to look for to exit that trade. Or you can simply wait for that little exit flag to show up, okay? Either way. The other great component of this indicator is the scanner that comes with it. If we go to the little power console here, the top left, that letter P, and we go to the Explore tab, on the top half here, you want to scroll down to the bottom where my indicators are, the Vora indicators, and here you'll see that you get to scan for both veracity setups, which are the diamonds, or veracity signals, which are the arrows. Okay? Now, I'll just quickly do one for the setups, and then here below are the markets that we want to scan. Okay. Now we'll do the Dow, the Nasdaq. Just to save some time, we'll take off the S&P. Maybe we'll leave the Forex. And then when you want to go to the right here, select your time frame. I'll just stick with daily for now. Okay. And then hit Start Exploration. And this will bring up this panel, and you can confirm what you've selected here. More veracity setups on a daily time frame here. And in a moment, as this completes, you see the green line going across. You'll see these fields populate. So here, there were 10 results, okay? 143 that did not meet the criteria, 10 that did meet the criteria, and here they are. It's very quick, very easy to use. These columns, if you look at the longs, whenever there's a number 1 instead of a 0, that means that this is a long setup, okay? If the number 1 appears in the short column, that means it's a short setup, okay? Now you can sort them by long or short, depending if you only want to trade in one direction or not. You can sort by the price level of the stock, or you can sort by the slope. Remember the 20-period moving average? So if you want to focus on the ones that have a dramatic slope on it, that's what you want to focus on. Be it a slope lower or higher, it doesn't matter, but the bigger the number, the more dramatic that slope. So if we look at Baidu, for example, right, it's on negative 16. I can click open that chart, and it should populate that chart back in here. Let me just move this out of the way and expand this. So you see the slope on that 20? See how dramatic it is? And there is the setup. If we look at our expert commentary, it'll tell us that if we get a trade below today's low, then we'll have a valid setup to the short side, okay, on Baidu. And that is a very dramatic slope. So this can save you a lot of time. Not only can it go through hundreds and thousands of stocks in a matter of seconds, but then it gives you the option to sort them by the specific criteria that you like to focus on. You can also save the list. You can copy it and paste it into another watch list, all of those things, okay? It is very, very handy. But I can tell you from using this that it has been extremely consistent throughout all different time frames. Okay. Again, the main thing to focus on is not to trade every single signal. That's not what we want you to do. We want you to focus on the high probability ones. Now, also in that course that I'm talking about, whenever, say you were to have two trade candidates, right, and they were both similar, they both had strong slope, strong trending chart, etc., what else can you use to differentiate one from the other? Or say, hey, one is better than the other. How can you shorten that list, right? What can you use? We'll teach you all of that. So let me quickly tell you about that here. Let me bring that page up for you. Give me one quick second here. Let me just bring it up from my other monitor. 1 second. And then I'll come back. I'll be happy to answer more questions, show you more more charts. By all means, I will stay. I know we started late. I'm happy to stay a little longer if it's okay with Steve. Let me bring this in to your view here. If you go to /now, that's tradingwins.com/now, it'll take you to this page. And these are the two packages we've put together for you. Okay? One is the Platinum package, which includes the full veracity indicator that you just saw, along with a lifetime license to Metastock. Now, some of you may have Metastock already and don't need it. If that's the case, you can contact us and we'll give you a discount on the package. It also includes, what that means is one of our technicians will get on the phone with you and set this all up for you, okay? It also includes 2 months of data at no charge, and it includes 2 of the training sessions, okay? In these 2 training sessions is where we go through the full explanation on which signals to take, which to not take, how to differentiate one from the other. We'll teach you all those other tools you can use, be it Fibonacci and others. All of that's included in there, along with a 30-day membership to our pro service at Trading Wins. And let me just quickly recap what's in that. In the 30-day membership, you'll get nightly videos from myself every Sunday to Thursday. So 5 times a week after market close, you'll get a video where I recap what happened that day in the markets, where I think things are going. That's also where I share some trade ideas as well. and I cover different aspects of technical analysis as well. Whatever comes up on a chart, I will explain. Also, as a pro member, you get to join us for our live market chats. What that means, you'll come into our room twice a week for an hour each time and have the ability to ask any trading-related question you like. It doesn't have to be on veracity or any particular strategy. It can be on anything that you're struggling with, and I will do my best to help you out with. We also have a very strong group of members with a lot of experience that are more than happy to help each other. And every month we do what we call a course of the month at no additional cost for our members. So you'll get that as well. And all of those sessions are recorded. So if you work full time and you can't join us live, you'll receive the recordings of all of those and can watch them at your leisure. So that's the Platinum package at $9.97. On the right is what we call the Day Trader package. And it includes everything that you see in the Platinum package, except one additional recording that will focus strictly on how to day trade veracity with options. So again, you'll get the full package, the full indicator, along with everything else, the lifetime license. You'll get 3 of the training sessions. You'll get my option plan for intraday trading. In this case, you'll get 3 months of the real-time data and 60 days of the pro membership, the Trading Winds Pro membership for $16.97. Again, it's tradingwinds.com/now. Okay. Ed, this package is for Metastock. Yes, we are in the process of programming veracity for other indicators, for other platforms like TradeStation is one that we did, and Tactical Trader is another. There are others that will come on board very soon, but Metastock is part of this package here. Okay. Let's go back. Are there any other questions on this? I'm happy to share a few more examples with you if you like. And of course, you can use this with other material. I mean, just thinking of Steve's expertise in the candlestick field, right? He does great work with that, and you can always combine a candlestick formation with a particular veracity signal by all means, right? There are many parts of technical analysis that you can combine. Chip is asking, what does the pro service include? I'll recap it briefly once again. So you get nightly videos 5 times a week from me, every Sunday to Thursday, where I recap what happened in the market that day. I tell you where I think things are going, and I highlight some trade ideas or other technical analysis tidbits that I think will be helpful for you. And those will be, you'll have your own video library within your account that you can view those anytime you want. Then there's also the 2 live market chats every Monday evening at 8 p.m. Eastern, 5 p.m. Pacific, and every Thursday morning, 10 a.m. Eastern, 7 a.m. Pacific. We have what we call live market chats. You get to come into our room and ask me any trading related question you like. If, say, you can't make a session live, you can email me the question ahead of time. I will answer it during the live session. And then, once the session is over, we throw the recording into your own video library. You can come home, watch it, and get the answer to your question, right? But so you'll have at least 8 of those every month in your own video library. And also the course of the month. Every month is a different topic that we do for our members at no additional cost. That's all part of your membership. So you're going to get all of that on top of the indicator, the Metastock license, and so on. And again, if you have Metastock, you can contact us. Let me give you my email address. Just send us a note at info@tradingwinds.com. That's info@tradingwinds.com. And we'll contact you and give you a discount for that Metastock license. Okay. I know I'm out of time. I apologize for the late start. If there's any other questions, I'd be happy to answer them. I don't know if Steve is still with us, again, thank you again for joining us this evening. If there's any questions at all on this, info@tradingwinds.com. But again, I just want to say I've used Veracity for the better part of 20 years. It is my baby. It's extremely consistent, and I hope you take a good look at it, and I'm sure it's going to work very well for you. Thank you very much, everybody. If Steve's on, I'll pass it back to him. And if not, I'll just bid you all a good night. Thank you again for joining us this evening.
So, Vince, thank you very much. Very good information. Everybody, Vince has been around, and he's a professional trader, been around for decades. Take a look at his information. It's well refined, well cultivated. We appreciate this, Vince. Good stuff.
Thank you very much.
Everybody,
again.
have a good evening. Yep. Thank you for being here. Thank you, everybody.